Hello everyone, hope you are doing well. I don't know if you have seen the video of this morning in which I was expecting a pullback, you know, until this 5-minute rejection block, because I thought that this was liquidity. I mean, it is liquidity, but it's not for today, So the point why I was expecting a pullback, so because I saw this as, the last SMS type, which is, short term, intermediate term, whatever short term you want to use. But we are in the 5-minute time frame, and this shift is more powerful in the 1 minute. And so here we are in the 5-minute time frame. Okay, so in this shift, we want to look for anything above 0.5, like a liquidity or a fair value gap or whatever. Here it was liquidity. So I was expecting this, that's why. But I didn't look into lower time frame in which this shift happened. Okay. So for example, this was, for example, the shift which I was talking about. Short term, intermediate term, short term. Okay, Fibo from high to the first swing low, sorry, and anything above 0.5. So this liquidity, okay, or this imbalance has been mitigated. So maybe this one, why not? Okay, but, or this one, but whatever, you can just, I think it's enough for, it's, yeah, 6 pips, 6 pips stop loss is enough, So you can trade right from this. Okay, perfect. Remember, I said when liquidity is clear like this, above the 0.5 area, then it will, for 100% sure, it will come. And it came there, okay? So it came there, but it was 5 in the morning, so I didn't catch it. I'm start trading at 8. So 8 right there. Okay. Start of the day. Perfect. So once you miss, there is a general rule, when I know the direction, the bias. So for me, it was 100% sell, no hesitation in this case, because firstly, because we have moved a lot and we have cleaned all the sell side buy side liquidity. So we have taken all stop losses and buy stops and, and so now we needed at least a pullback, at least cleaning this liquidity. So the minimum TP area would be, for example, this, okay? So if you remember my 3-step formula, what I'm looking for at the very beginning is liquidity. Once you know where the price is heading, to which liquidity it is heading to, so you have the bias, then you have to look up for a place to trade from. So you cannot just trade from anywhere, randomly, and put your stop loss randomly and just target here. So here, the shift, it was good, okay? So here, this shift was clear in the 15-minute. So what do you do? Well, we take the move that shifted, the price. Let's see in 5 minutes. And you wait for a pullback around the 0.5 level, which corresponds to this fair value gap. Okay. Or in the 15 minute, you can take simply, it mitigated this fair value gap, but you could just take the fair value gap that broke the structure, which is called the displacement fair value gap. And so, how do you trade this? So you know the direction, okay, sell. You know the TP area, TP1 if you want around there, and the second TP around there. And you have your place where you want to trade. Then the next step is to look for a shift in market structure. Let's see what we have there, okay? So if you want to play it risky, which I don't recommend, you could just wait for the first imbalance going in this direction, okay? So once you pull back in this blue area, fair value gap, you wait for the first move, a clean, clear move, with imbalances, and you could trade right from there. Or you can wait for a clear shift of market structure, because this could have went above again before doing the same thing, But so that's why I prefer to wait usually for a shift unless I'm 100% sure of the place I'm trading, So here you could say this is, the intermediate term. Sorry. Intermediate term low, short-term low, short-term low. We break this, okay? Fibo from there up until there. What is above the 0.5? At least this fair value gap, okay? So you can trade from there. Stop loss above, because this would be the intermediate term high, short term, intermediate term, and this is a short term. The short term high can be taken. As you can see, it was taken right after. But the intermediate term high should not be taken. It should be protected. Otherwise, there is something wrong in your trade, okay? So here, if I get a stop loss, then I will question my trade and my plan. However, if I put the stop right there and I take the stop loss, it's not significant, because this is a short-term low. And here is the range, from low, so from high to low. You can say that this is the range, the whole range, Here, it's just inducing more people to buy, with this break of structure. Boom. BOS. Okay. So let's say you took break even because you sold. It's 15 pips. Okay. You sold, you didn't take profits. Boom, break even. You don't re-enter directly. Okay. You just see what it is doing. So what is the order block which took this liquidity? Let's see the order block. It was this one. Okay, this. You can take the week, of course. order flow. This order block, boom, you know, from this little candle, it went straight to take the liquidity. And so now, if you know the most powerful shift of market structure, you know that you have a little imbalance right there. You know this is the last OB that broke the structure, and most people will look to buy there. And so what do you do? Two solutions. First, you can wait for a bullish candle close. So you could sell from there. And now you can put your stop loss there. Because you expect this one to be the new intermediate term high. Okay? And of course, you always target the you know, at least below this 15-minute order block. Most people will look for a buy there. Why? You know, this is a demand, strong demand zone. Look, the big candle. Look, strong demand. People will look from this demand zone or order block or whatever. So liquidity below 100%, below even this one. Okay. Let's go back into the 1 minute. Sorry. And you sold either from there or from the fair value gap. So two possibilities in this shift of market structure. Fair value gap. Okay, you can sell from there. Stop loss. It's just a matter of 1 pip, you know, so it's not too much. Don't care. And you target at least there, or what we have said there. Okay. And here you got more than 20 pips or more than 5. You should bank 100%, you know. 100%. Once you start taking this liquidity, you can allow one candle to see if it's going straight down or not. And then I lock my profits here for sure. Okay. So if you want to trade your stop loss, well, you can try. But once you start that it's accumulating, just take your profits and don't, you know, it's not worth wasting all this just for one more pip. And then it could come back to break even, you know. Look, if you took the trade from this candle close, if you put your stop a little bit, you know, below break even, just to secure your spread, then it could hit, you know, your stop loss. So that's it for the review. I could have taken this trade this morning, but I didn't see it like that. And the lesson is, once it start breaking in Asia, so you see, before the 8 open, if it start taking, start breaking, you know, shift, market structure, and you know that it will go down without pullback. Generally, it doesn't pull back when it does something like this, you know. It happens from 1 or 2 times a week, sometimes, that it just go down and you have to try to catch it, you know, and don't be trapped, you know. If you sell from there, boom, they take your stop loss, even though you had the right direction. That's why it's important to trade from the right place, you know. And what has helped me a lot to find the right place is all the intermediate term stuff, you know. So short term, intermediate term, short term. This short term can be taken, boom. This could become an intermediate term. You must look for fair value shift in market structure or fair value gap in lower time frame. Okay, and you continue because you know the direction. So the only difficulty when you know the direction is to know where to put your stop loss and where to enter. But most importantly, where to put your stop loss. Let's say you enter randomly, I don't know, right there. But if you know the intermediate term high is there and you are targeting this one, you are still profitable. However, if, I don't know, if you are selling, from this order block and you put your stop loss there, not good. If you put your stop loss there, it's okay. It goes into drawdown, but you are not stopped out, So the intermediate term high, it's a very strong knowledge to have in order to protect your stop loss, and to have, confidence of good positioning. It's one of the best tool I have discovered with ICT. And so I really recommend you to, if you haven't watched his video about in the 2022 mentorship, I believe it's between video 11, 12, 13. Or if you can check my video where I talk about intermediate term, short term, etc. So that's it for today. I'm trying still to get the video short, not too much talking, not too much bullshit. But I try also to incorporate some, some basic stuff that you must have learned if you have seen my educational videos. If not, I recommend to see, I didn't make 100 video. So it's 12 videos, I think, for now at the moment. So 12 videos to see, it's not long, and you may learn a lot from them. And so, yeah, then you can catch up and understand everything I'm doing on a daily basis, because I will try to do videos every day covering Euro USD. And so if you don't have a live execution, you can expect a review at least. And yeah, I hope you enjoy this type of videos and that you can learn something from them. And see you tomorrow. Trade safe.